Home Depot on the move here this morning. Their results showing that shoppers are, at least for now, putting their HDTV dreams on hold. Consumers are seeking out fewer do-it-yourself projects compared to what we saw during the pandemic. And as a result of that pullback that we are seeing in consumer spending, same-store sales, they declined 2.8% during the quarter. For a deeper dive, we want to bring in Bob Nardelli, the former CEO of Home Depot. Bob, it's great to see you. So I'd love to just get your reaction to these results that we got out from Home Depot this morning and this trend that we have seen on the weakening consumer. What does that signal?
Yeah. Well, first of all, thank you for having me. I couldn't be prouder of what Ted Decker and the team's doing over at Home Depot. I think they had a pretty solid quarter again, given the challenges that we're facing in the economy. I think that, again, his proposed acquisition of SRS for 18.9 is a knockout punch. He'll add that to the Home Depot supply business. He'll own the pro customer while still having over 2,000 stores to serve the residential consumer. So I think they're very well positioned. They're well run. They're organized. And I think they got a terrific product offering across the board in all of the SKUs that they have over there. So I think what is happening is some of the discretionary projects that were done during COVID, post 9/11, when the home became a sanctuary, are now being deferred. Why are they being deferred? We talk a lot about the consumer is strong and they're spending a lot of money. Or are they spending a lot of money but getting less volume? So that's why we see credit card debt accelerating here. So I think they have to be much more discerning in what they're doing. They're being very conservative about managing their bank accounts and their credit cards. I wish we were doing that at the national debt level, to be honest with you. So I think Home Depot will continue to be well positioned. It's well run. They got over 460,000 associates serving, basically across North America and also on a global basis.
Bob, what do you mean by spending more at less volume? Is that a nod to services spending going up?
Yeah, here's what's happening. I mean, we keep talking about on the news, you keep hearing, well, the consumer is strong, they're still spending. Well, are they spending more because of volume that they're buying, or are they really spending more due to inflation? I deal with businesses 7 days a week, and I would tell you that inflation, we'll see it tomorrow again, is alive and well. I think it's got a long tail. I'm starting to see it more and more, even in the specialty materials. If you think about what we're hearing with Biden putting tariffs on China on EVs, that's not going to help the cost. Most of the EV manufacturers, we heard from Ford losing $100,000 on every vehicle. We hear Musk now recognizes he's got to put more chargers out there. It's a charging anxiety now, not the range anxiety. The challenge will be, does this country really have the power to support an EV fleet when at the same time we have a war on fossil fuels? So the ambiguity and the missteps and the debacles of this administration astounds me. I think we'll see significant cracks in the economy we have. And whoever goes into that White House is going to be hit like a bowling ball with some of these challenges, given where we positioned our country and the economy and the cracks in the economy.
So, Bob, before we get into the tariffs, I'm curious just to get your perspective a bit more on the consumer right now, and specifically how you would advise the CEO of Home Depot, Ted Decker, how he should be navigating this, what is expected to be a complex couple of quarters here, because we are starting to see signs of the consumer weakening. I know you were saying that he's been doing a great job here, but just from your experience as the lead, as the CEO of Home Depot, what do you think the next couple of months, what the next couple of quarters will likely look like for this name?
Yeah, well, there's no doubt Ted and the team do a magnificent job of marketing, merchandising, and product selection. So what we'll see probably at Home Depot, we're seeing at the grocery stores, people are trading down on brands. They're going more to opening price points. They're buying less of the high-end material. Again, with the home becoming a sanctuary, I think people will continue to want all of the comforts outdoor that they have indoor relative to kitchens, relative to furniture. When's the last time you saw an aluminum web folding chair in the Home Depot store? So I think there'll be a selection process that goes on, and they are smart enough to know how to market that, how to position that, how to provide the continuing services. You may not improve things, but you still have to repair things that are broken. So they'll focus on how do they maintain that customer service service opportunities to provide the ultimate service to the consumers that they have out there. And they'll do a great job. They'll look at, if you get another dollar a cart, it's billions of dollars to Home Depot. So they'll figure out how to sell the entire project. If you're coming in to paint something, you get your brushes, your drop cloths, everything related to the project to save you from making another trip to pay $4 and above for a gallon of gas. So they've been through this before. We lived through it in the 2000 period, and they'll come out the other side extremely strong, very, very strong.
So I'm going to ask you to put on another executive hat here, Bob. I'm curious, if you were to become the VP of Asset Protection, what would be the single biggest thing that you would do to prevent theft in stores?
Well, you raise an excellent point. We had shrink when I was there in 2000, but it was legitimate shrink. It was shrink that happened as a result of freight handling, light bulbs got broken, things got damaged. And we spent an inordinate amount of money to put surveillance cameras. We had a observation room. And back then, we could legally stop someone that was stealing. We could stop someone that, basically it's theft. It's not, it's a misnomer to call theft shrink, right? We do it to be polite, but we were able to control that. Ted and his team now are putting security people, they're adding dogs, they're adding outdoor parking lot surveillance. All of that adds to cost. On top of that, theft continues to add an inordinate amount of cost to operating that business. So look, Ted's doing everything he can within the limits of the regulations that are out there today. Until we get serious about it, I think they're going to continue to have to live with it, unfortunately.
All right, Bob, while we have you, let's talk about the tariffs that were announced here today, and specifically what it means for the EV industry. And I'm asking you this as the former CEO of Chrysler. I'm curious just what you make of the current competition landscape right now between the U.S. automakers, exactly the threat, if it's really a threat that we are seeing from Chinese EV makers, and then also just the idea that has been floated by a couple members of Congress, specifically as Senator Sherrod Brown, who's saying that he actually wants the Biden administration to ban Chinese EVs outright. Is that something that should be considered?
Well, I'm not a big proponent of that. I think I'm a big free market guy. And if they have a strategic advantage. They've got all the raw materials. They've been at it for a long time. They aren't burdened by all of this green movement. They're not burdened by a number of these regulations, government taxes, EPAs, et cetera. When I was running, Chrysler or GE, we had to compete on a global basis. So I never had an outsourcing strategy, but I did have a global competitiveness strategy. So I had to compete with the likes of Siemens, ABB, just like Ford, General Motors, and a lot of the EV companies here are having to compete with China. So, okay, you can stop the import of EVs, but how is that really going to grow? The hypocrisy here, he wants to grow the installed base of EVs. So if everybody's losing money, look at these startups, $5-6 billion last year on EV startup, because we're buying most of the raw material offshore. And then we have this increased labor rate. Look, I'm all for families making a fair living. We see the UAW now going after a few more auto companies here. And I understand the purpose of that, but that will come back to haunt us because the cost of the automobile will go up. And here's what will happen. In 2000, when we had the in 8-9 with the Obama administration, we had the CAFE standard. What happened? The average age of the internal combustion engine car went up significantly. Who benefited? The auto stores, right? So here we are again now trying to force EVs when we don't have enough electricity or chargers. We know that AI will dwarf the Bitcoin data centers and is just going to suck electricity out of the grid. And we don't see major investments going into grid because of this war on fossil fuel. So I don't understand. I don't understand the logic, the simplicity of trying to make these ambiguous decisions in what we're trying to do to this economy.
Bob, in our final minute together, more like 30 seconds here, I am curious in terms of the impact on the market and businesses that make up the market. Would legislation against companies like a Shein or a Temu be more effective at maintaining market momentum than the legislation that we're hearing about now?
Yeah. Well, Shein's doing a great job. Again, they really have come up with a business model where they produce a run. It's attractive. It's affordably priced. They ship it in. I'm very familiar. They have cargo planes going back and forth daily. They do the distribution. So it's a pretty effective model given the economy and the situation where we are with inflation and still trying to provide consumer solution. So I think they've got a good business model. Now we can stop that. I'm not sure the impact of what's going to happen. Do we just get into a trade war? It's like a price war. Once you start it, how the heck do you get out of it has been my experience.
All right, Bob Nardelli, we always appreciate you taking the time. Great to get your insight here on a wide range of topics. Bob Nardelli, former Home Depot CEO, as well as the former CEO of Chrysler as well. Thanks so much, Bob.